Okay, so I was just in the shower, right? And that's where the magic happens. That's where your best ideas come to life. And I got to thinking about everything that specifically happened today because today was not really a crazy day as far as news, or we're coming off of Tesla earnings. Nothing too crazy there. Tesla did drop 10%. But there was a couple different things that happened today that are very much indicative of a stock market crash. And specifically, it's Apple. The technicals on Apple, you can't deny. You can't ignore this. You literally cannot ignore this. Now, the Philly Fed Manufacturing Index, as well as the VIX, you're currently in what's called contango. This is normal. This happens more than backwardation. And we'll talk about this, but it's essentially where people are betting on volatility, right? And you can see from this chart, people are betting that volatility ramps up very aggressively over the next 2 to 4 weeks. So we'll dive into that and exactly what you need to know on all this. But back to what I was saying. I was in the shower, get a good idea, jump out the shower. I'm like, I gotta go make this video. I'm kind of hungry, so I gotta go make the video. I start on my way, not even thinking, slip, fell on the bathroom floor, almost hit my head off the toilet. Terrible, terrible, terrible. But we got to get into the topic of this video because there's more to that story, but y'all don't want to hear it. Let's get into everything you guys need to know. So, first things first, and this is not really going to be in level of importance, because they're all important. And let's start with the first things first. Philadelphia Fed Manufacturing Index. This is really the thing that has CNBC, that has people making YouTube videos about this recession. It's because of this. You were expecting the Philadelphia Fed Manufacturing Index. This comes from the Federal Reserve Bank of Philadelphia. You were expecting this to come in at negative 19.2. It came in at negative 31.3. Why is this significant? Well, if you pull up the max chart, in which is up right now, you'll see that every single time you go under 30, meaning you're negative 30 or lower, you have seen a recession literally every single time. Sometimes you can bounce off of 20, right? And that does happen quite often. But every time you go over 30, you have seen a recession. Back here in, what was this? The mid 70s, it looks like. The early 80s. The early 90s. What is this? 2000, right? .com bust. 2008, COVID. And now you're here again. And this is something where a lot of people on CNBC and analysts and these notes that are coming out from analysts are saying that hey, this time could be different, but it's probably not. Meaning that we've never not seen a recession when the Philadelphia Fed has went under negative 30. But maybe this time's different, but probably not. Meaning that it's possible that this could be a this time is different kind of moment. Probably not going to happen. Probably going to see a recession. So this is why everyone specifically is talking about a recession today, but I think it goes a little bit deeper than that, because not only did you go into deep recessionary territory on the Philadelphia Fed, but you also have this. And I think people are really missing this across the board. Take a look. And I'm sure some of you guys seen this today. It's Apple. Lo and behold. Every time you have hit this line, this downtrending line, you have sold off. Every single time on Apple. Literally every single time. If you want to get technical, you hit it right here. And we're going to go through these percentages. And literally, like, you hit it, and then you almost instantly sell off. That's why it's so significant. Let's go ahead and pull it up. Roughly an 8% drop back here in December 2021. Obviously, that wasn't, Apple is doing fine around that period of time. They even went up to hit this level again. And then that's when you got your first bit of decent downside, and that was about 14%. And this was in early 2022. Still not too crazy, but a decent amount of downside for Apple, right? And then you kind of trend down lower. You never come back up to this level to hit this line. Trend down lower again. And then you get this explosive rally in March of 2022. Explosive rally. You come up. You hit that peak. And then what happens? You fell almost 28%. 28% in 2 months. This was a 2-month period. You fell 28%. Pretty rough. And that was right after you hit that line and got rejected. And notice the tops here. They're like a couple days maximum. And then you really start to sell off. And you get some pretty big candles. Then you hit it again in August of 2022. And we'll talk about why Apple is so important and why I'm even bringing this up. Don't worry. That happened in... Oh my gosh. Chart is tweaking out. That happened in August, right? After... This was when Fed Jerome Powell did Jackson Hole in August of 2022 and said, like, basically, guys, you might get Paul Volckered. Like, we might have to raise rates to 6-7%. That's when Fed Bullard was coming out. 6-7% federal funds rate, and everyone started to panic. And believe it or not, the markets rallied for a little bit, and then they realized it was not so good. But from August until January of 2023, you dropped 30%. And most of this drop from August till, what was this? About October, the lows in the broad market was about a 24% drop in roughly 2 months. Again, notice this pattern. You hit the high, you stay up there for a day or two, come down, sell off for 2 months. And now it happened again. Again. And very shortly could Apple really start to roll over. The thing I want to point out as well, you hit this level today, and then almost like clockwork, almost like the algorithms were programmed to do this, Apple started to massively underperform the markets. Just selling off like nobody's business. Now, why is Apple so important to the markets? Well, Apple is 10% of the market weighting in the NASDAQ. They are almost 8% of the market weighting in the S&P 500. So think of S&P 500, think of broad markets, and think of Apple. That's what you should think of. If Apple is down 9 times out of 10, 9.8 times out of 10, they're both going to be down, or they're both going to be up. Yeah, that's pretty much how you can think about Apple. And that's why this is so important. And I would say this, in the short term, is probably more indicative of anything else. Like, this is your sign you're likely to get some pretty big downside from here. Now, the other thing that I wanted to cover here in this video that happened today as well is that the VIX futures curve is starting to accelerate at a faster pace, especially after today. And it's pricing in more pain here in the short term. So as you guys probably know, you've heard the VIX is like 16 and some change. It hasn't been this low in a very long time. Very long time. And typically 20 was really the level in which has been a big trading point in this market. So to be at 16 right now is a very big deal. Now, what you can see from here is basically where investors are expecting pain to come, right? So this is the price of the VIX, and these are VIX futures, and these are the dates. They're not quite, they might be VIX expiration dates for the futures. I don't trade them, so honestly, I can't tell you. I know they're not major option expiration dates. But you could see you really start to ramp up. It looks like next week, the week of April 26th, and that is going to be next week. The 28th is going to be Friday. You see a pretty big increase in volatility next week, and that's because you're going to get a lot of tech earnings. Now, it looks like it balances out for a minute, up or down 10, 20 cents. And then you get more panic towards middle to end of May. And this really is when the markets tend to crash, right? When the volatility of the VIX futures goes really like straight up. Like this is more so like, yeah, we don't know what's gonna happen. Like maybe it goes up, maybe it goes down, maybe the markets are red, they could be green, who knows? But when you see this, and this is really what I want you guys to highlight right here, that is showing you a massive ramp up in people looking for protection. People are starting to buy a lot more of those puts now, and that's what the VIX is. It's measuring puts and calls on the S&P 500. So you're seeing a lot more puts being placed towards the middle to end of May. And based off of the other things that we talked about here in this video, specifically Apple, it's hard to deny you're likely about to roll over in the broad markets. Now, I'm not a financial advisor. Could be wrong, so keep that in mind. But if I were to put my money on it, middle of May, shit's probably going to be hitting the fan. So that's what I have for you here in this video. Thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Now, actually, before we wrap up this video, I just want to explain to you guys contango, because I probably confused you guys. Contango is when you expect volatility to get higher, right? You expect more catalysts to come along and the markets might fall, right? Which is normal. That's what we see right now. Contango. Backwardation is when when the markets are very negative and people are expecting it to not be as negative, right? So over time, expecting volatility to fall. I just wanted to clear that up because I know I said contango and backwardation in the beginning of this video, and contango, probably a word a lot of you guys have not heard before. Now, that is it for this video. If you guys want to come trade with me live in real time, every time I do make a trade, link down below in the description of this video. Earnings season is a great season, but when the markets crash, that's an even better season if you can play some downside protection, get your hands on some of those options. And that is actively what we are doing in that community right now, because we are paying attention to the forward-looking signs. And boy, are they present here today. This was a big day. Thank you guys for watching. Enjoy the rest of your nights, and I will see you in the next one.